Hey guys, I just wanted to do a quick market recap today. It's October 25th, Thursday. It's 6:54 p.m. Pacific Standard Time, or 6:55, 9:55 New York time. Markets are all closed, but not necessarily sleeping, which I'll get to in a moment. Today, the bulls came back, rushing in, and tried to make their case that indeed the bull market is still intact. The S&P went up 1.86%, the Nasdaq up 2.95%, the Dow Jones up 1.63%, oil down 0.85%, which is relatively muted movement relative to its recent ups and downs. Gold fairly flat, up 0.12%. Just a quick note that it's still holding comfortably above that 1230 level that it broke last week after being around 1200 for quite some time. So just to point out there that despite all of the markets volatility in these last couple trading weeks, gold has been a pretty slow and steady customer there, which is good to see if you like gold. The 10-year down 0.021, that's the yield. So not too much there either, more or less unchanged. But I got to give credit to the bulls today. I gave an update yesterday of a fairly bearish case, not necessarily for today's trading, but for the S&P and the major U.S. indexes in general. Now, my outlook on the S&P in particular, or the U.S. indexes in general, has not changed. I still see a pessimistic case. Today was indeed bullish, but you have a one-day, bull market in a month of a bear market, and so one day does not a bull market make. But give them credit, give the bulls credit. They bought early, they bought lots, and they kept on buying. They took the index as high as 2722 from what was yesterday's close. Don't have that in front of me. A lot lower. I think it was 20. What? It opened at 2668. So it recovered a lot of ground from yesterday, especially up 1.86%, as I said before. And importantly, they did manage to regain that threshold I'd been describing for the last couple of weeks of, I was saying 713 to 730. So they shot back into that zone and, retested that for a while here. And I guess you had to be a little, small note of disappointment for the bulls, I'm sure, at the end of the day, as it ran out of steam a little bit and couldn't hold on to that threshold and fell back down to the range of 2705, 2706. But, if you're a bull, you should be proud of yourself. Great work today buying up this index. You really did a great job, and you worked hard, and you earned, all those selling points that you gained today. But my pessimistic view, for the interim here has not changed. Just as I said, it's been a month of a bear market, and this recent 1 month, maybe I'm not supposed to call it a bear market. It's been a month of a very pessimistic downward market, and the movement in this index in just this last month have really, I'd say, made at least the last 3 months look sort of dismal and sad. Having rejected all of the positive action that had gone before, and as we know from yesterday, the index. This index had lost all of its 2018 earnings, which has got to hurt. I mean, you worked so hard for those earnings this whole year. Now it's up a tiny little wee bit. I'm not going to do the calculation there. What's the low on that January 1st? 2682. It closed at 2695 back on January 1st, and now we're at 2705. That is not a very productive year, right? You want to do a little bit better than that. But take a look at this recent action, right? Since October 1st. Surely that is a rejection of much of what has happened in these last many months, the last 3 months, maybe the last 6 months. I mean, certainly it's cast doubt on the upward trends of the last 6 or more months. I still think this market wants to this market is pessimistic, and I think it wants to retest 25.80. I think the bears are out, and I think they want to know what 25.80 is like. I think that that's where things are going. And just to support that a little bit here, there was some big earnings today. Alphabet, which owns Google, and Amazon both reported after the close. Intel reported after the close as well, and I think a few big other companies as well. And you can see this headline here from CNBC. Alphabet stock sinks on revenue miss. Alphabet reported its Q3 earnings, third quarter earnings, missing revenue expectations, but beating on the bottom line. And it says here the stock sunk as much as 5.3% after hours. So this was something I found very interesting. I don't follow aftermarket trading very much. I haven't before, so I'm not too familiar with it. I don't have a lot of context to understand its movements, but let's just stick with Alphabet here for a second. They reported earnings per share of $13.06, whereas it was expected that they would report $10.42. So a huge beat, and I would have thought that would have impressed people. Unfortunately, their revenue was $33.7 billion. And the market expectation, I suppose, was $34.04 billion, according to this article. So that, I'd say, relatively narrow miss of about 1%, about 300 mil or 0.3 billion on the revenue, apparently was enough to just plummet Alphabet. And really, if I go to Yahoo Finance here and look at how Alphabet is doing after market, you can see it had a great day today, up 4.27%, but the after hours trading is down 3.70%. So, tomorrow hasn't even started yet, and all of today's gains are almost gone. I mean, you can't be too happy about that if you're a bull. You worked so hard all day buying up this index, and now, just in a few hours, it's all gone. And I was actually watching this when the market closed, and a lot of this downward movement happened right after the market closed, because Alphabet and Amazon announced right after the market closed, and really within 15 minutes, most of the day is gone. Most of the day's gains were gone within about 15 minutes in Google and in Amazon as well. Similar thing in Amazon. Here's a headline from businessinsider.com. I will put the links in the description this time. Amazon stocks falls 9%. That's referring to after hours trade. As disappointing revenue guidance seemed to outweigh standout third quarter earnings. So again, I found this a bit strange, because the earnings did seem to stand out to me. When I first saw the quick, breaking news headline of those earnings, I was momentarily very nervous about my bearish stance on the market, because the earnings were just slaying all expectations. And you can see that here in this article. Amazon on Thursday reported third quarter earnings that were more than $2 a share better than analysts had forecast. But the company's revenue for the period was lower than expected, and it offered a disappointing revenue forecast for the fourth quarter. Investors sold off the stock on the news. And indeed they did. If we go and take a look at Amazon on Yahoo Finance, it's not doing so well in the aftermarket. It had a great day, up 7.09% on the day while the market was open. What a fantastic day for the market, for the bulls to take that one right up. But a few minutes after the closing, they released their earnings, and look at that. After hours, 7.42% down in after hours. Once again, tomorrow hasn't even started, and Amazon lost all of its gains in terms of the stock movement today. So that has got to hurt the bulls right where it hurts. And that, for me, just shows that my bearish sentiment is the correct reading, or at least one I'm going to still stay with, because tomorrow does not look like it's going to be very fun or very special for the markets based on this aftermarket action. So that's it. Quick update. Thanks you guys so much for listening. Have a good night.